Today is June 21st, 2025. Call it a sustained downtrend with minor basing structure here, which is defined as a post-bearish breakdown after undercutting a minor ascending uptrend price support level with a solidified solid breakdown candle close below that key inflection point. HKD has been bleeding lower beneath a prolonged descending trend line ever since we broke that key inflection point. And now we are forming a potential short-term base near the 165 range with sideways movement inside of an ultra-tight compression zone here, tailing back to where I really didn't want to see 186 go, let alone the ascending uptrend price support level that has now been backtested and retested multiple key points here off the 786 fib resistance level. The RSI and the relative strength index printing around the 40-40 handle, weak. It is definitely weak, but definitely on the stable side with slight higher low divergence versus price. So you could have minor bullish divergence beginning to form here, with the moving average convergence bearish, but seemingly beginning to flatten, which could additionally suggest trend exhaustion. Make no mistake, the 186 was taken out, and it really stopped out a lot of my position there where I was gearing up for these upper near targets. With the stochastics here coiling near the oversold levels, watch for that crossover phase, which could trigger a minor bounce as well. The indicators are more exhausted than bearish. If a pop could be triggered on light volume, but the larger structure could still favor sellers here. Make absolute no mistake about it, the ball is in the bears' court here, and I believe the triggering would be an undercut of the 165 era. That 165 level goes, I believe there's going to be a ton of additional margin calls, stops to go off, and it would be a perfect breakdown structure with the considering the stochastics, RSI, MACD, and all ADX would suggest dead price action about to fall again, given the only risk a fake flush to trap in shorts there. That would be a key scenario. Again, still exceedingly early to tell. We're either in the catching a falling knife phase or catching the first whiff of trend exhaustion. And this chart is coiled for a violent move with a direction to be determined here. But these are some of the key technical levels to follow up on, where HKD could very well be a playground for tacticians and technical analysis traders. Its clean Fibonacci and compression setup screams that range is about to expand, but the direction is a coin flip, but the payoff is asymmetric.